Stocks on Wall Street staging a broad rally Wednesday afternoon. Leading the three indexes, Apple. For more on Apple's prospects, just one day after its big announcement of products, let's go to Los Angeles, where we're joined by Ross Gerber, CEO of Gerber Kawasaki and the shareholder of Apple. Well, Apple shares rising a little more than 2.5%, Ross. The stock's up more than 40% year to date. Are you more or less bullish on the stock, given what you heard yesterday with the slew of new products and services?
I'm more bullish on the stock after what I saw yesterday. You know, I've been pretty critical of Tim Cook's lack of innovation, but I'll have to say, for not innovating anything, he's doing a great job with the evolution of the products. And when you look at actually the wearable area of Apple, which is growing very fast, I was very pleased with what they've done with the watch. I've been very close with the watch for years, and this new Series 5 is incredible. But I think what's really interesting about Apple, now that they've laid out their services strategy, there's no question that they're going to get more dollars from a certain percentage of their users on a monthly basis, which will, ultimately add to their revenue and hopefully their bottom line over time. But I think Apple has a very impressive lineup of hardware and now services, and I think that they're in the best position they could be in for a company that's not innovating in a lot of areas we think they should be.
A lot of attention, Ross, has been placed on the new streaming video, the TV service, Apple TV Plus, and it's expected to overtake Netflix and users easily simply because it's giving it away, the service, for the first year for free if you buy an iPod, iMac, what have you, or iPod. So how do you think it'll fare as a business, given that it's undercutting the price of Apple, of Netflix and Disney, but not offering as many shows?
Well, yeah, I don't think it's competitive with Netflix and Disney in that they have so few shows. It reminds me a little bit more of the Amazon Prime approach to streaming, where they're going to lose money on this streaming service, but it's a service to get you to buy and upgrade your products, really. And that's okay for Apple, because the real problem with Apple is people aren't upgrading hardware. So this gives you another compelling reason to upgrade your hardware. A, the hardware is way better, new iPad and things like that. But B, now I get some free shows out of it too. So I think the Amazon Prime approach makes sense for Apple, because we really want to drive hardware sales. But I think this is a money loser. It's kind of a loss leader for Apple. But it's a nice thing for people who get new Apple products all the time, like I do. So I'm sure I'll have this service.
I remember last time we had you on the show, just before you went, you said you thought that Amazon Prime was going to be the loser, as we have all these new competing services, whether it's from HBO, Netflix, and Disney's service, now Apple. Where do you see the competition? Of course, a lot of these haven't started yet, but
right.
Where do you see the competition going from here?
Yeah, I want to take back that Amazon comment, because I think now that I've thought about it more, Amazon, once again, they need to keep people subscribed to Prime, so they're going to keep investing in their programming, because it's a loss leader for them, the same approach Apple's having. But what I really think the loser here is AT&T. AT&T with the Warner acquisition and DirecTV acquisition. DirecTV is done. I mean, they haven't innovated at all. And when you look at Spectrum and you look at some of the other cable providers, Comcast, and the way they've pivoted and diversified their businesses, like especially with internet services, they're in much better position than DirecTV. And then secondly, HBO, which lost their CEO, who is a phenomenal player, but HBO doesn't seem to have a very clear strategy here. And I think there's a lot of risk that, the Warner assets sort of wither here. But I think the real loser here is traditional television and cable. And when the sports packages renew, that'll be the end. So the only reason people are keeping cable now is simply for sports. And boy, the world has changed. So we've finally got a la carte television, even though Apple didn't lead the change. We're certainly here now, and I think it's great for consumers, and ultimately there's a ton of great content being created.
And in T's case, or AT&T, you've got Elliott Management breathing down their neck now too.
Right, and so from my perspective, Elliott has the right approach. Like, hey, you bought all these assets for 100 and something billion. We've got to divest ourselves, especially of DirecTV. I would. The cash flow is nice, but it's a dwindling cash asset. I would try to get rid of that as soon as possible. But I think ultimately Elliott's barking up a tough tree, because AT&T isn't really great at anything anymore. and other companies are better in each area that they're in. So I wish Elliott luck, but that I think it's going to be tough for them.
Okay, well, that's all the time we have for Ross. Thanks a lot for giving us your thoughts on Apple and now AT&T as well, and Amazon.
Thank you.
Our thanks to Ross Gerber of Gerber Kawasaki joining us from Santa Monica, California via Skype. I'm Fred Katayama, and this is Reuters.